You open a personal finance book or watch a wealth guide, and they all say the exact same thing. Cut your expenses, buy a broad stock market ETF, and wait 40 years. It is excellent advice if you already have a six-figure portfolio, but if you are starting near zero, it is a mathematical bottleneck. Let us look at the actual numbers. If you save $5,000 and earn a historically strong 10% stock market return, you make $500 in a year. That is a solid yield, but in the real world, a single utility bill hike or car issue will swallow that entire profit in one day. In our last video, we mapped the compounding trap and showed why the first milestone is a pure savings game. But you cannot save your way to wealth if your savings rate is capped by a low income. To speed up the timeline, you need a stronger engine. You need to invest in your own career leverage. Trying to optimize a tiny investment portfolio before optimizing your career is like installing a luxury sound system in a car that has no engine. The sound system might look impressive, but the car is not going anywhere. Your career is the engine that generates the capital in the first place. Let us compare the direct trade-off. If you put $5,000 into stocks, you wait a decade to double it. If you spend $1,000 on a high-demand skill certification and put in the work to pivot roles, you can increase your income by $15,000 to $25,000. That is an immediate first-year return of over 200% on your capital. Instead of patiently waiting for a slow portfolio to compound, you leverage your own human capital to create a massive surplus of cash flow. This surplus is what makes stock market investing meaningful later on. To do this systematically, you must treat your career as a deliberate skills portfolio. This is not just a CV listing past employers. It is a structured collection of 3 distinct categories of human capital assets that are explicitly aligned with market gaps. The first category is foundational skills. These are broadly applicable capabilities like basic data analysis, database querying, and project management. They form the baseline of modern knowledge work and make you highly adaptable. The second category is specialist vendor credentials. These are platform-specific trust signals like Salesforce, AWS, or Azure certifications. Because global corporations actively license these software packages, they create a massive secondary job market looking for validated professionals. The third category is soft execution. This is your ability to translate technical knowledge into real business value. It includes structured writing, clear presentation skills, and the capacity to coordinate a small team. It is what separates a technician from a valuable leader. Building this portfolio is an engineering project for your career. It requires moving systematically from market research to practical execution. Here is the exact 3-step strategy to make the pivot. Step 1 is to identify a high leverage gap. Do not study skills based on general internet advice. Open local job listings and look for high-paying roles that explicitly preference a specific, standardized credential. You are looking for high demand with a low barrier to entry. Step 2 is to secure the standardized credential. Commit to a structured study timeline, ideally a 12-week sprint. Set a strict exam date and treat the prep with the same discipline as a formal university course. Step 3 is to package the proof. A resume credential is only a door opener. You need public proof to close the deal. Build a repository containing 2 or 3 realistic, completed projects that show you can actually deploy what you learned. But this strategy has a real warning. Unlike passive investing, where you buy an ETF and your work is done, a skills portfolio requires significant sweat equity. The risk of non-completion is high, and a half-finished study course has a return of 0. Another common trap is the credential collector syndrome. This happens when you collect 3 or 4 certifications without ever building a project or applying for a role. Credentials without functional proof are just paper. You must transition from studying to execution. Finally, understand the transition point. Once your skills portfolio elevates your income to a comfortable level, the relative return of more certifications starts to drop. At that milestone, you transition your cash surplus back to stocks to let them compound. Once your income is optimized, your next bottleneck is protecting that income from flowing back out. Most gurus tell you to cut out daily coffee, but the math says they are wrong. In our next video, we audit the big 3 structural expenses, keeping you from real wealth. The stock market is a compounding engine for existing wealth. Your skills portfolio is the engine that generates that wealth in the first place. Build the engine first, and the compounding will follow.